Hello, Warriors. Good day before Thanksgiving. How you doing, Mary, Bran, Raj, Patrick Bolter? Happy Thanksgiving to you. Mike, who's thankful? For what? For hanging out in F.A.C.E? Anyone thankful for that? Thankful that I'll finally get my charts up.
Morning, Dale. There they are.
Good to be thankful for little things.
Small mercies.
Yeah, so anyway, guys, good day before Thanksgiving, and even though you guys don't celebrate it over there, we're thankful that you and Kman have been added to the team. And
Thank you, mate.
yeah, so I've learned a lot from you guys. So looks like silver's being contained, and it's actually outperforming the gold. Gold, are we going to test the line of death here? We'll see. The metals, just don't seem to have it, even when, the backdrop is a weaker dollar. EG's probably selling off here. A view on euro and anything you want to do in these currencies. Pound seems to be the strength. Yen, I don't know. That 550 sell in Canada was pretty good. I don't feel compelled to do anything right now. I know we have the Fed minutes. Do you think that's going to be a market mover? It's kind of stale news, isn't it?
Yeah, you can never say never with the Fed minutes.
Yeah.
It is a bit stale because, we've heard from every Fed member, 10 times over since then. But, I think the main message that's probably going to come from it is maybe how strongly the views are on how high rates go and how long they stay up there for. The last week or so, we've had every Fed member pretty much banging on about rates going a bit higher than expected, and they're going to stay up there. So that's probably reflective, but we're probably going to need some real strong comments to really move the dollar on that.
Okay. S&P stretched yesterday. Blake said he wouldn't be shorting risk. That was great advice. We're approaching this recent high of the recovery rally. What do you think? We get through? And then, we have the line that everyone's looking at, the whole world. I mean, everyone is looking at this downtrend line in the S&Ps.
Yeah.
Doesn't look like it has destiny.
No, I think that the key thing here, look at the candles, very tight candle, very small candle yesterday.
Yeah.
Very small candle today. What's really going to
weekly?
Is anyone going to push the boat out with the holiday tomorrow and people taking a long weekend Friday? But then on the flip side, if you are sitting in front of your screen, sometimes that low liquidity, especially in the futures stuff, can push prices around. If you get a low liquidity bump up there to that line, you've got to think, well, you've got to have a crack at that, haven't you?
Yeah. So, sometimes, do you ever find, like, I'll tell you something, I'll be, frank. I don't feel like doing anything today.
If you're going to be
that?
If you're going to be Frank, I'm going to be Bob.
All right. Anyway.
You're right.
I just, I feel like I'm trying to create something.
Yes.
Today.
Yes.
Right.
And I said that on the flow. It's a danger at these times, these periods when there's nothing going on. You pick your levels, your trade levels. If you don't get your levels, then you don't do anything. But what you don't want to do is go looking for a trade, try and find a trade, pinch a trade, and end up stuck in the middle of a range and it's going nowhere, or it's offside a little bit, and you're thinking 5 hours later, why the hell did I do that?
I have I've been baffled by this, and I asked Kathy yesterday. The oil shares have been the strength for 2022. I mean, they've outperformed the market tremendously, even though. So, I mean, here's here's the crude. You know, we had this was the invasion, then we had like the failing rally, and we've been heading down for a long time. But then you look at the oil shares, and despite the decline in, so keep this chart in your mind. Now look at this. They look like two different markets, don't they?
Yeah.
And so, you know, I'm wondering if that's going to be the same with the miners eventually, that, you know, that I guess you get to a certain price level as a producer that even though the commodity has topped, you're still printing money, and that the shares can outperform because, you know, this was, I guess, the invasion. No, this wasn't the invasion. So this was the invasion. All right. And even after the invasion, that was a high in crude. Look at that. Then we had the secondary high was probably here in crude. And then people said, oh, I got it now. Who would have expected with crude doing nothing for the energy market to continue to be the star? And I noticed yesterday, gold came off yesterday, right? You know, it was lower on the day, but look at some of the gold shares. They didn't come off with gold. This is their dailies. Okay.
Actually, I was pretty surprised by gold's move yesterday, considering what currencies
Silver
were
was
doing.
doing. Oh yeah,
Yeah, well, I was
yeah.
just thinking currencies, but
Yeah, I've been disappointed with the metals because of them not taking advantage of a weak dollar for a few weeks now, Blake.
yeah.
You know, so you know that's what but what I'm thinking here is that, you know, if we ever do have a bull move in gold, that maybe you don't consider getting out of everything when you think the bullion has peaked in the miners, because shares can continue to perform like I just showed in the energy patch, even though the commodity may come off because they're way above production prices, even on the correction, and they print money. So just a little coaching. This is something I learned, you know, you have to learn by, you know, living and screen time. And I've just been amazed by how the oil shares have continued to be the strength of the market with what WTI has done. So you have to learn something from that. And that's all I got.
We're always learning, Dale. Wise words is always.
Yeah. Yeah. What's Kman up to today?
He's putting his pants.
Hello, everybody.
You're packing?
I'm not up to much. I'm just having like small bits and pieces running. I'm not trying too hard. There's a load of data coming out in the States this afternoon, and perhaps afterwards I'll do a couple of trades. But going into Thanksgiving, I'm more of a spectator than an actor, to be honest.
Yeah, you're watching football.
I'm watching football, then I'm watching the Chinese yuan.
Okay.
There's a candle. Wait, hold on, Kman. Your country's playing today.
I am.
Yeah. You're going to play too?
I'm playing tonight versus Canada.
Canada.
Oh, so I know what you're going to do.
That's why the Canadian dollar is getting sold off tonight.
Yeah, I know you. This is the candle of the month, as far as I'm concerned.
Oh, I don't even know what it is.
Newmont. It's a major gold miner. That's a pretty impressive. You know, they were trying to hold 40, 40, 40, and then they just flushed everyone out under 40. Look at this. No one stayed long. And then we had this, and the month is ending, right? In about 5 days. Pretty good month.
There's a lot going on about whether China is building up gold reserves again, so that may help.
No, yeah, they are.
Those miners
selling treasuries, buying gold. That's what they.
Yeah, but you know, even the treasury still. I mean, the TLT has it bottomed?
Yeah, I don't know.
You know, yeah. I think Jim's looking for like 110 and maybe 120. So yeah, even treasuries are acting pretty good. Okay. Looking forward to a couple days off, and I would just be careful. The thing I think there's a risk that the market doesn't like something, even though it's old stale news, in the minutes, and uses it for an excuse to maybe take profits into the long weekend. We'll see. They had a pretty good squeeze day. I do know this from looking at this level right here. It's not showing it anymore on that TF. Most people would, wait for 39, like 39 to get bearish, but this 39.50 area, I mean, they did a lot of work there yesterday. We shouldn't take it out again. So there's a trap door under this.
Good morning, Coach.
Hey, buddy.
Hey, and good morning, team.
Hello.
Hey, Stell, Kman, Ryan, what'd you guys talk about during the European, during the flow show after the European PMIs came out? They were all pretty good. It was pretty good data, wasn't it?
We talked about cooking recipes. What Stell's getting on.
Come on, you talked football. That's what you talked all day. I know it. I know you, Ryan. I know you very well now, and I know all you talk about is football. So but really, jokes aside, here's an overview of the data that came out overnight, and you can see a lot of the data is pretty strong. So how did you guys read that? And is this the catalyst that's driving the dollar lower? Because we're seeing the dollar really lower against everything, but the euro isn't even acting that well.
Strong's a selective word.
Yeah, they're still contractionary, right?
I mean, yeah, I guess they're still below 50. Sorry.
Yeah, they're less crap than they were last month, but it's all following a theme of still being crap for this month after last month. A lot of news out of China, more cities going into mass testing and curbing this, that, and the other. That's picking up, and just before this show started, we had potential headlines out that China's going to hit the big RRR cut.
Yeah, that's obviously given it isn't helping any risk because it's obviously just rumor right now. But Kman, what do you think about that? Because you're the one playing the CNH right now. So what do you think?
On the CNH, I think this talks about possible RRR cuts. I think in current context is negative China. I was just updating something in our chat room. I haven't pressed send yet. I think it all depends. Cutting reserve requirements is a double-edged sword. But in current context, since they are not yet reopening, it might push people into more foreign currencies than they already have, because they need less reserves to put against it. But if it would be in an opening economy, it might actually have the complete opposite effect. So today, I think it's a little putting additional pressure on the CNH or CNY, and I think we could push back up in somewhere into the 720s, mid 720s somewhere.
Well, then look. I mean, you look at the chart that I'm just kind of putting it together as we speak. I mean, that could lead us to a big long-term head and shoulder pattern. You never know. I mean, if we stopped in the, like, as you said, mid 720s to 730, somewhere around there, because that would be like this pennant formation completion. Then next thing you know, we got this head and shoulder pattern. That would be kind of scary looking. Anyway, just some food for thought. Not saying that it's going to happen, but that is interesting. So putting it all together, here Ryan, Stelios, we're going into PCE data today. We got the FOMC meeting minutes. The last meeting, and you guys correct me if I'm wrong here. The meeting itself, the FOMC statement, it read one way, but Powell came out and it read a little dovish, and then Powell came out and he was hawkish, and that changed, because I remember the dollar that day. Let's go over to the dollar index. That was what, on the 2nd, I believe, November 2nd, if I'm not mistaken. Right here, Yeah. The initial reaction was lower dollar because it was a more dovish statement, and then he came out pretty hawkish. We rallied significantly right into channel resistance, and we rolled over ever since then. The meeting minutes, as you pointed out earlier, Ryan, they are going to be stale. Obviously, we've heard from so many central bankers, but remember the meeting itself was. The meeting statement was dovish, so maybe the FOMC meeting minutes are going to read very similar. What are you guys' thoughts there?
I thought it was hawkish. The meeting was hawkish. All right, yes, they talked about
the statement was dovish, more dovish. He was hawkish.
Yeah, exactly. He was.
But if we read the minutes. Maybe the minutes are going to read more dovishly because the statement was dovish, right?
Maybe so. If it does, and if the dollar sells off, I'm going to be looking to buy that dip.
Really? So you're a dip buyer in the dollar?
Yeah, I'm waiting for Powell. I'm dollar bearish longer term, but I'm waiting for Powell to come out next week potentially and knock all the effect of that dollar move that we've had since the CPI and PPI. And send it higher to then reshort. But I think if the minutes give us anything of a decent dip in the dollar, I think it's a dip buy because we've heard every Fed member banging on about rates going higher than expected and how long they're going to stay up for.
Okay, so you want to fade the dollar, but or fade this dollar move. You want to buy the dollar basically. But I want to point out a couple of things really quick technically that have me questioning that move now, and this is nothing more than just technical. I understand the backdrop you're trying to lay out here, but take a look at the euro. The euro, we got this bull flag pattern that we talked about this on the week ahead video. We're looking for initially some euro weakness into 102 into early this week. How about if we get some PCE data that's a little weaker than expected? You got the euro that's trying to pop its head back above 103. You got the sterling that is nearing 120, and that's a bullish. We've been talking about this bullish, development in the sterling. We are hitting highs right now. Then you got the Aussie that's trying to give us that bull flag pattern. You got the Kiwi that won't go down, and then post RBNZ. I mean, we're up at 62 cents. We break 62 cents. This thing's gone. You got the dollar Canadians, still in a bearish head and shoulder pattern, even though it's up right now in this channel. If the dollar rolls over, it's going to roll over against probably everything, including the Canadian. You got the US dollar Norwegian krona that's heading back down in this channel. You got the dollar MEX that's already broken down. It's broken a multi-year trend line. You got the dollar rand, same thing, breaking down pretty aggressively here. The dollar yen's doing its whatever the dollar yen does. But, the dollar itself looks pretty wounded against many different currencies. So how would you play the dollar buying the dip? I mean, what are you going to buy it against? The euro?
Anything really. Dollar yen. If we get a decent move down in that one, that's usually my go-to dollar trade. But you've got to look at it in the context of time frames. Okay, I'm dollar bearish. I've been long Aussie dollar, as you know, for a longer term play. That's my mainstay. But shorter term, you want to look for an opportunity. I think there's still a big risk in Powell being hawkish next week. So I think if you get a decent dip in the dollar to run into there, I think it's a good risk reward. If he isn't, well, fine, then you get stopped out or you get out of the trade or whatever. But then if Powell is hawkish, he's going to ramp the dollar up, and then I'm going to be looking into scale more longer term shorts. So it's different time frames I'm looking to play here, short term and longer term.
Okay. Stelios, what do you think about FX right now? I mean, you got this, like I said, you got the sterling that's really, really, popping higher here. And I have a feeling a lot of people have been trying to short sterling. I'm not sure why at this point because of this reversal that it's put in. But how are you feeling about FX right now?
Well, as I said before, I think going into Powell, the market's probably going to grind lower in yields and the dollar and higher in stocks and risk. And that's kind of what we're seeing again today a little bit. So I will agree with Ryan. I have a medium-term bearish view on the dollar, but I think the risk is increasing, especially as the dollar sells off. The risk is increasing that the market gets really disappointed by Powell, and the move I think is going to get reversed.
You guys keep mentioning Powell. I mean, are you guys talking about the FOMC meeting in like 3 weeks?
He's speaking on the 30th.
Yeah, Brookings.
Yeah, but
Institute.
what's he speaking about? He's
Football.
speaking about the economy and labor market at the Brookings Institute in Washington.
Yeah, the day before the PCE, I believe that his favorite number comes out the next day.
No, yeah, okay, yeah.
It is a venue where things have been said in the past, right? It's not something that's usually a non-event, so we have to have our attention on that. It could be that he doesn't give us anything tangible, so then we'll have to wait for the FOMC.
No, okay. But, you guys are really betting ahead of time. I get it. All right. Okay.
But until then, I think we grind. I really do. And
you know what? I put in a typo in today's tweet. I said PCE, but it is PMIs that are coming out today. So that's my bad. So sorry about that. I probably got everybody excited, and I was like, oh shoot, that isn't the PCE.
We have durable goods as well. We have
durable goods today, right? Yeah. All right. Well, cool. So. Shifting gears back over to Dale's conversation. Dale, I love that chart on Newmont. I think that Newmont mining chart is spectacular. So what the fudge sickle is happening with gold? I almost said it. I didn't though.
Okay. You know what would be great, Blake, is I don't know if it's going to happen, but say for example, gold, first of all takes out Steve's line, your line here. Then there's no support till the breakout, right? Now, what if gold pukes one more time and the shares put in higher lows? That would be the most significant market tell that I've seen in a long time, because miners have actually been weaker than the bullion for quite some time.
What's the miner ETF? What's
GDX?
GDX,
but GDXJ for the juniors.
G, not J. G.
No, but that's the junior miners. Well,
Golf,
okay, GDX.
Delta, X-ray.
And GDXJ is the juniors.
Jing jong, jing jong.
And SILJ is pretty active. That's a junior.
Yeah,
SIL.
And
it's early in the morning here. You guys know it's early. Dale and I, we got. It's early. All right.
I moved my laptop into my bedroom. I'm doing it. I'm kidding.
Good for you. Yeah, glad you have.
I'm having breakfast in bed. Yeah.
That is not what I wanted to do. GDX. Sorry, I totally messed this up here. Let's see. Okay. We'll use an ETF. Let's see if I can grab I'd rather just do it this way. It won't let me do that. That's why.
Oh, the gold over the GT.
Yeah, I was just
use XAU USD. Why don't you use that?
I know. You know what? Piss off. All right,
he's a dinosaur.
All right. So here you got your miners and gold. Yeah, the miners are actually looking a little bit better and gold isn't. Yeah. That's interesting. Yeah.
See how much they were really
the correlation's super strong. So
but they were weaker. Look at that decline.
Last year and a half miners are underperforming, and that has to catch up somehow.
Yeah.
I like that, Dale. I really like that.
Yeah, look
pullbacks like 25 on GDX or something.
Look at the big brains on Dale. I like it, Dale.
Good eye stuff.
Good stuff. All right, cool.
I'm taking brain food.
All right. Well, speaking of other things that are moving right now, we got crude oil that actually looks pretty weak here. I'm actually surprised. I don't know, and I don't play crude that often. Very, very, very little actually. We attacked this support the other day, and then we got this headline that reversed us, gave us a false breakdown. But crude's weakening again. Do you buy this dip? What do you guys think here?
everyone's bid 70.10 because Hochstein or someone, Hochstein yesterday said that they're going to be immediately buying oil if it drops to $70 or below.
Yeah, so wait for that. One more
I don't
shot
know.
down
I just don't
first.
know if we're going to see it. I don't know if
We've
we're
got to
going
line
to see
up bids out of him.
Yeah.
China's the risk, as with pretty much everything. China's the risk here. So if they go into lockdown and things look bad there, then these lows are probably going to go.
All right. Well, hey, we got a few minutes. I heard Steve. Steve, what's your World Cup pick today?
I don't even have an idea who's playing today. Just give you an idea. Just know that Belgium is playing.
Just because you heard us talk about it earlier?
No,
Canada and Belgium.
Because we talked about it yesterday. I haven't checked yet.
Got it. Okay.
Any interesting
Steve,
games out there today?
Nope.
We're going into Thanksgiving holiday. Steve, love to get your opinion on the markets, but before we do, I just need to mention that Thanksgiving holiday, even though it's a US holiday and liquidity is going to be kind of poor, we can already feel it in the FX market. Like, things are getting a little bit, spreads are getting a little wider. I got stopped out on a trade last night because the spreads widened too big, stopped me out overnight. And I'm starting to feel it just in currencies. And I think we're starting to see it in markets in general. Reason why I mention this is I just want to say, be careful out there. Be careful with your sizing. These are the kind of days that you can get yourself in trouble. And if you get yourself in trouble, it's hard to get yourself out of trouble. Because moves become a little bit more erratic. So just be extra careful, over the next couple of days, even though you might be in Europe or in Asia or somewhere else that you're not celebrating Thanksgiving holiday, liquidity is going to be just a little thinner. So just be aware of that. So Steve, what's your thoughts here? I mean, you got equity markets that are, we're above 4,000 in the S&P. We're not too far from the 200-day moving average, which seems like to be it's been our target all week, as long as we're above 3,900, getting to the 200-day moving average. But how do you feel about the markets here?
I hate to be boring and keep repeating myself, but on the other hand, it's a good thing that I don't change my opinion for no reason. I've said days ago what I think is happening here in the markets. I think that we're still in danger of seeing the equities push a little bit higher and the dollar pushing a little bit lower, but I think it's going to be short-lived. So I would be very hesitant in pushing that side of the market. I think we've already seen the easy move in that direction. And I've said many days ago that I do think that Powell has a very, very, very high probability of disappointing the markets once again.
Steve, can I interrupt you for a minute?
Yeah.
Because I think it's important. Blake brought it up too. What do you make out of the fact that weaker dollar does not translate to jet fuel in the metals, in gold and silver?
I think it's too early, and the market is still, perplexed with what's happening here. We're seeing market participants in general being a lot more cautious because a lot of them have been burned the past 5 times that Fed had a meeting. The market was generally positioned more dovishly than they should. So despite seeing this move lower in the dollar, I think there is a lot of uncertainty surrounding the dollar. I mean, myself, I've said it before, right? I'm not sure the dollar has topped. There is a chance it hasn't, right?
Okay.
So that explains why the markets, are
the metals in particular.
Yeah, although we have to admit that gold has broken out.
Hey, guys, just
30 seconds.
We got less than 30 seconds. I know you guys will.
I'll argue with you later, Steve.
Yeah, you guys can pick up this conversation a little bit later. We're monitoring the dollar, gold, S&P. And as we head into this into the data, we got durable goods orders, jobless claims, and we will have. Let's see if we get a reaction here. So,
5 seconds.
There we go.
Okay. strong durable goods, but weak revision. So probably not much.
Yeah, I mean, gold got an initial spike lower, and
In any case,
the dollar.
as we've said before, the market in general, we talked about it before. The ideal bullish scenario for the market is weakness in the economy, but not too much, right? Perhaps a mild recession, but not a strong one. And, you know, this is another set of data that doesn't really provide these people with what they actually would want to see.
Euro's starting to move. Kiwi's moving. Aussies moving higher.
Wow.
Yeah, people are leaning into this with they're selling some dollars into this, and gold is actually showing a bit of a reversal here too. So, hey, you know, we got some a little bit of reaction, but Steve, I'm sure you're going to finish your thoughts on the morning edge, which is exclusive to the ForexAnalytix community. Dale, you should jump in and you guys can argue over there. That'd be great. I know you have an interview that's happening right now. I just want to mention, hey, if you want to check out the trader funding program, you should, because if you want to get involved in the ForexAnalytix community, this is one way to do it. Learn how to trade our money, not risk your own money. So if you have, you know, if you don't have access to larger amounts of capital, but you want to, or you just don't want to risk your own money, you don't take any risk. You make 75% of your returns, and you can trade our money after you pass an assessment. So check out the trader funding program. Watch this 2-minute video. We've been authorizing payouts quite religiously and quite frequently in the last several months. So
no, this is very true.
Anyway, I'll see you guys later. Dale, happy Thanksgiving to you, and happy Thanksgiving to everybody here in the US. And if you're not, enjoy a little bit longer and hopefully peaceful next few days. So thanks everybody for tuning in. And Dale, thank you as well. I'm very thankful for you personally.
Happy Thanksgiving, brother.
Thank you.
And team, have a great weekend. Thank you again for everything you guys do to, you know, keep us in tune and educate us, and, you know, give us more pieces of the puzzle for our narratives.
Really. So is there a FACE? There's no FACE tomorrow and Friday, yeah? Just to let people know.
Right. We won't be broadcasting. Okay. So I'm taking my yearly vacation, 1 day off. So anyway, thank you, team. Have a great weekend. Happy Thanksgiving, Blake. Blair Wheaton. Blair Wheaton, welcome back to FACE. How are you?
Hey, Dale, I'm great, thanks. Thanks for having me this morning.
Great to have you back, Blair. You want to share your screen and talk about what's top of mind and what your algos are saying, how you're using them, and do you think that today's the kind of day that you don't do much because of the illiquidity in the markets?
Yeah, I thought that was a great comment. Yeah, so let me just do a quick review here of for the gang on what time trades is and how I use it. So since we last talked, you know, I'm continuing to refine the timing information provided by time trades. It's a machine learning based algorithm that makes estimates of future probabilities of up days and down days and pivots. Okay, so it's a helpful add-on. It's important to look at it as an add-on to your existing price analysis and not an answer, right? Like there's no silver bullets in this business, and time trades is not. But some of the more
would you really just kind of simplify it and say that it gives you a bias on what side of the market to trade on?
Yeah, that's a good simplification. One thing to be aware of is the probabilities that are generated, and I'll show examples of this. You know, they are subject to inversions. There's been some great examples lately. So this is what time trades looks like, right? And this is a screenshot from October 30th. right? And this showed a bearish bias going into mid-November for the spiders. And the point here of this is that, you know, like anything, it can be wrong, but when it's wrong, it's 180 degrees wrong, right? So obviously the spiders,
they invert. The cycle inverted. You're getting a great testimonial from Mary Harper right now.
She's wonderful, and we're grateful to have her on board. Yeah, I love Mary. Thanks,
Mary's
Mary.
a great shill. She does it for us too. Thank you, Mary. She's always here, so we know it's not a shill. So okay, you have fans. Your reputation precedes you here in
well, thanks Dale, and thanks Mary. Yeah, it's you know, it's just about being data driven and trying to, you know, extract some of the emotion out of the trading decisions. And you know, I like to lead with the bad news, right? Okay, so this is an example of when it's wrong. It's 180 degrees wrong. We had an inversion going into the last CPI. So you can look at it as directional signals. What we provide are directional signals. You know, this lane here shows probabilities of a move down. This lane down here shows probabilities of a move up. You can also, if you want to, you can interpret them as probabilities of a move, of a big move in any direction. And then you can use your own intuition about and tools about what direction it's going to go. Okay, so actually here is, I want to show this screenshot.
So out of curiosity, it was a bearish cycle. It inverted, it's bullish. So when was the bearish cycle about to end? And that would give you an idea of when this rally might terminate.
Well, exactly. And this is, now we're looking at time trades live, right? So this is with the probabilities retrained as of last night and the latest price data. Okay. So in the past, we can see the forecast moves up and down match price really well, because that's the machine learning being trained to match the price moves. Okay. So then in the future, we've got the machine learning is making a prediction based on this historical trained model, and we can see a steadily increasing probability of down moves here. Okay. You know, keeping in mind the directional nature of this and that it is subject to inversions, right? Okay. So, you know, that's the cues. And one of the things I do appreciate about time trades is just, you know, kind of the speed of being able to take a look at a large number of symbols really quickly. Now we've moved on to the spiders, and we can see, you know, starting the 30th, in about a week today exactly, we see a cluster of moves down. So what this is measuring, Dale, is the probability of a 2 standard deviation move down over the last 5 days. So this might be the peak of a move that's actually starts 5 days prior. Okay. 5 trading days prior, which because of the long weekend, it's actually yesterday, right?
Right.
So we see this cluster of down moves. We see a gap in the up moves. One of the things as well that we notice is when the up moves decline, that can also cause a drop in prices, right? But you know, I think what's really more interesting than time trades is how to combine it with traditional TA and that. And, you know, that traditional TA really has to be kind of the foundation of interpreting these. Like, people that are successful with time trades use it as an add-on to their existing TA and don't, you know, use it as a shortcut, right?
Okay.
So I want to share with the group some of the tools that I've been using, and, you know, it kind of corroborates what was just talked about earlier today about, gold looking really interesting and also natural gas. So if we take a look at, the Qs, 100% agree with what everyone else in the Forex analytics community said so far today about where we stand here. But I like to use an indicator on the bottom here called CMF, Chaikin money flow. It just adds another dimension to the analysis that includes volume, right? So I look at it as a smarter on balance volume. If you're not familiar with it, it basically it includes where on the bar the closing price landed, and it combines that with volume, and it displays a moving total or basically a 20-day moving average of that, right? So what you want to look for in these is, for a bullish move, it should be above zero. And you also want to look for the line going up and confirming these moves, right? And what we see here is Chaikin money flow kind of peaking and then declining as the move ages, right? So it's a great leading indicator of a top. We can see, Chaikin money flow peaked well before that August high.
Couple weeks.
Yeah. So it gave you a great heads up here that, hey, we're getting close to the end of the move. And then, down here, what we're seeing is not a huge expansion of it. I mean, okay, you could argue it's mildly bullish, but it's not above zero, okay, on the NQs. Of course, the Dow is, the strongest, and it is above zero. Okay. But you can also see elements of distribution here in the last few bars as it dropped pretty heavily. So that indicates, two things.
Selling.
It includes selling, and it includes, the on balance, the volume is higher on these red bars. Yeah. Okay. So, we may see another push up here on some, holiday trading, some low volume trading. But, it's starting to look like we're closer to the end than the beginning here. Okay. That's also the message from time trades. And we go and take a look at, let's go take a look at, what we've learned the last few weeks from it. Okay, so here's Apple. What I want to share is, this was a good call from NVIDIA, October 15th. So we saw a big cluster of green here coming up in NVIDIA. And, in 3 weeks, that turned into a 26% gain. It actually went on to almost touch 170, right? Yeah. So, it definitely needs to be combined with your traditional TA for best results. But one of the things that's really interesting here is these white horizontal lines. And these are static levels. So they're the same for everything, but they are basically powers of phi, right? So it's really powerful when a stock crosses one of these white magic levels, and especially when you get that confirmation on the Chaikin money flow, the CMF. We can see that confirmation here. We cross the magic level. And that kind of fueled the move up here. And now we still see expanding CMF even on this little decline. So it looks like there may be a little bit more to go here in NVIDIA. So this is a 4-hour chart. Let's look at a daily. What's the daily telling us? Well, the daily is showing signs of declining CMF as we get closer to the top. So maybe this move is indeed closer to the end than the beginning, like what we saw in the NASDAQ futures.
Okay. Looking at everything that you use, your tools, and how many different markets do you look at, Blair?
Well, we cover about 700 different symbols with time trades,
Oh,
so it
okay.
does include
That's a
Forex,
huge
it
universe.
includes crypto. So if we go
Okay.
over to time trades, we can click on models and we can get a scan here of what's in the system, right? So
Yeah.
if we just look at stocks, we can see all the different stocks that are there on NASDAQ and NYSE, and we've got crypto coins as well, a bunch of different pairs from a number of different exchanges. And of course, your bread and butter, we've got currency pairs as well.
Okay. Is your work saying the dollar has peaked, or that there could be a nice rebound in the dollar?
That is what it looks like to me. So we see a big pivot high that's been trained to match the September 27th high. And we do see clusters of red here indicating probabilities of down moves.
We're looking at NVIDIA.
You're seeing NVIDIA.
Yeah, so I
Okay.
have NVIDIA.
Maybe I should stop and reshare then. Let me just fix that shortly. Here we
Okay.
go. All right. So here's time trades live. Okay. So this shows the values that were retrained as of yesterday. So are you seeing DXY now, Dale?
Yeah.
Yeah. Okay, great. All right. So, yeah, we've got a pivot high trained up. And this is the thing about historical prices is they're always going to look perfect in the model. Okay. So that's because that's the training data. And then based on those relationships, we can see the projections going forward here. And we're seeing some forecasts for further directional moves down coming into December, which makes for an interesting kind of thought experiment, right? Because if we see the dollar going down at the same time we see stocks going down, that's very much a big regime change, because the last few months and quarters it's been the opposite, that basically everything's been an inverse dollar trade
Right.
Yeah, so
everything, it's all been one market depending upon dollar direction.
Yeah.
So your stuff is and I brought this up, but a lot of people say, well, you know what, Dale, you're trying to, you're talking about correlations and you're trying to figure out the jigsaw puzzle. Just treat each individual market like it's its own entity. But I believe that there could be a time when the dollar is bad and US dollar denominated assets will be outperformed by foreign assets and most likely not be good because of the currency. Is that what you're starting to see with some of your big picture stuff?
That is a possibility here, and I'm hedging because that implies direction, right? And we've got directional forecasts here for the dollar and directional forecasts for stocks, and we see increased probability of down moves, and of course we all know the macro environment, but it's interesting to me that we could be seeing an incredibly fast transition. There's a potential for an incredibly fast transition from inflation to deflation. Like that's not out of the realm of possibility here. So that would indicate a regime change to one where we do see both the dollar and stocks decline.
Okay. And you think gold would rally or empathize more about?
Well, yeah, let's take a look at gold. Let's take a look at another favorite I'm tracking right now, natural gas. So we've got GDX up here, and you can see my favorite Chaikin money flow at the bottom. It's above zero. It's increasing, and you can see how it's near the the top of the range. We saw a big pop up here indicating accumulation, right? And it's stable above zero. And you know, it's the GDX looks like it's about to take out this white magic level here, which would be hugely bullish. So it's positioned
what are the blue vertical lines underneath?
Oh, yeah, that's a good question. So this comes from the time trades indicator here. So this is part of the service. And that's something that we call the Gann waves. And if you just, it's basically a lunar cycle. Okay, so if the blue is the bottom of a Gann wave, the yellow is the top of a Gann wave, and you'll find that often they correlate with pivots in price. So it's very useful. I've found to have them on the chart. You can see here, you know, we got a pivot right around yellow. This blue here tagged a pivot within a day. We got a pivot here recently right around yellow.
Where's that next one come in underneath the blue?
Well, the next one, yeah. So just look at time. Don't look at the price. Okay, the price is not implied here. So that's Monday. Yeah. Okay. So the next pivot here is Monday, and I actually really like it with natural gas. So if we look at natural gas, it's a great example. If we actually scroll back, it's tagged a lot of the major turns in natural gas. Like these are insane, you know. Really, and this is just a simple lunar cycle.
And those vertical lines were there before the market got there. That's not machine learning.
100%. Yeah.
Okay. So wow. Okay, that's all I could say. I'm always fascinated by this stuff. You want to wrap it with one more thing you want to cover, and then show your website and how people could follow you, and if they're interested, get involved with you?
Yeah, sure. Why don't we close with, you know, what you were looking at earlier, which is Newmont mining. So I brought that up, and, you know, let's give a little time trades perspective on Newmont mining here, right? And, you know, similar to GDX, it's basing just below a magic level, right? Remember, these are powers of F.A.C.E. So we're combining, you know, some market geometry with timing information from lunar cycles. Chaikin money flow slightly below zero, but it's stable and increasing. You can see how well this dip was bought here. So yeah, this is positioned to do well, you know. And yeah, let's go and take a look at the website here. So we can do a quick look at Newmont. And we see a wonderful cluster of green here. This is what I like to see, is clusters, not just like one-off bars. Relatively high probability. You know, I don't like the, you know, 40s and 50s. I like them up, you know, 80 plus.
Above 70.
Yeah, that's solid. Okay. And I also like the fact that, you know, we've got a pivot here. This is probabilities of a pivot, and then we've got to move up after that pivot. So this pivot is for today. So often these can, you know, just sort of act as a bit of gravity, keep price tamped down temporarily. And then, you know, you release the hold down clamps and away we go. So yeah, Newmont looks great. The website is time-trades.com. Okay. So feel free to check it out. And yeah, it's a wonderful little timing add-on. It's important to understand how this is positioned. It's an add-on, it's not an answer. So if you're interested in a way to get some timing bias that can accompany your existing price work, this is a great way to do that without having to read a dozen books and you know, learn a bunch of new techniques.
Or have one of those big Gann squares.
Or have
on top of your table. Is that what it is? You know, that people have that big, it's a big Gann thing and shows the whole, it looks like a compass.
Yeah, those things are great, and we do make use of
I figured.
It's
But
called the
you
square of
integrate it.
9.
So you don't have to learn GAN because you're getting the advantage of GAN with this.
You're getting some of the advantage of GAN. I mean, GAN is
Yeah.
very deep, and there's lots there.
Yeah.
It's not just one
Makes
thing.
my head explode. Yeah.
Yeah. Oh, for sure. The man was brilliant. And,
Yeah.
you know, I've implemented a portion of his work here. There's some, certainly the square of 9, what you're talking about, is in time trades, as well as, we're doing things like counting from a pivot. So over here, this would be a pivot. We're counting, perfect square days, trading days after that, like 16, 25, 49. And we're using that information to help determine the probability of moves up or moves down.
Really a great monster you've created, Blair.
Thanks a lot, Dale. Yeah, it's a young monster.
That's a compliment. It's a compliment. It's a monster.
I'd take it as a compliment, 100%.
Right.
And
Yeah,
and it's a young monster, and hopefully it grows up to be an 800-pound gorilla.
Blair, thank you so much for being here again and sharing your work. And I wish you and your family happy Thanksgiving. And let's get together next year and see, what kind of growth the monster has by then. So.
Thanks a lot, Dale. Appreciate that, and happy Thanksgiving to you and your family and the ForexAnalytix community as well.
Thank you, Blair. Good hunting. Good hunting, my trading warrior brother. I'll see you.
You too.
All right.
Thanks,
all right. Well, everyone, happy Thanksgiving. Simon, Bhavana, everyone that stuck around to hear Blair. Laura, thank you very much. And I will, Paul. I need a few days off. And Richard, everyone have a great holiday, great weekend. Look forward to getting back into the saddle next week. And our team is always rooting for each and every one of you guys. Okay? Adios. And remember, don't just count your pips, count your blessings. Thank you, guys. You're welcome, Richard. Galaxy.